A very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be taking a look on the euro, which has been on the bullish trajectory for almost 2 to 3 weeks now, and after consolidating closer to 1.12 zone, it has picked up momentum, and it is pretty much on track to 1.15. Even in today's monetary policy by the ECB, we saw that there was no substantial change, and the interest rates as well as the PEPP, the Pandemic Emergency Purchase Program, has been left unchanged, and the commentary has been encouraging if you consider the economic scenario, and also now the ECB is relying on the governments to act together and extend the fiscal support to get the economy back on track after this disruption by the coronavirus outbreak. So on that front, the ECB is adopting a wait and watch approach, and for the time being, it is holding on to its current monetary policy stance of continuing to support the liquidity in the system as well as holding the interest rates low for at least foreseeable future, unless and until the inflation pressures start to show up. Earlier in the day, we got the GDP numbers for the China, and here there is actually optimistic development that the GDP numbers for China have come better than the expectation, and for the second quarter of this year, China has recorded a growth of 3.2% in terms of year on year, which is quite outstanding if you consider the way it has rebounded after experiencing the contraction of 6.8% in the first quarter, and this is going to help the global recovery as well. At the same time, we got retail sales numbers and the unemployment rate numbers as well, and the retail sales numbers are continuing to be below the prior year's level. So in year on year terms, there is a decline of 1.8%, whereas the unemployment rate has gone down slightly, and now it stands at 5.7% for the month of June. Moving on to the North American trading session, just a while back we got the retail sales numbers for the US, and here there is a rise on both counts, month on month as well as year on year. The rise in terms of month on month is substantial at 7.5%, and it is modest, but still it is a rise, and 1.1% growth is there in terms of year on year figures. So this is proving that the economy is picking up, but of course as the cases spike up, we will have to watch out for the upcoming data, and let's see how things evolve. We also got the weekly initial jobless claims for the week ended 11th of July, and here actually the jobless claims are more than the expectations. The expectations were of 1.25 million, but more people have applied for the jobless benefits for last week. Now moving on to the technical front, here we will cover the EURUSD and the NASDAQ. I think I forgot to make change to that listing, but here we have this EURUSD's technical outlook. This is the daily time frame chart, and this price zone of around 1.15, which looks like the next target for the EURUSD is not that far. We have seen consolidation closer to 1.12 for almost a month in the month of June, and after consolidating closer to those levels, the EURUSD has again started rising, and after today's monetary policy announcement, we are seeing fresh momentum, and that is likely to prevail for at least the next couple of sessions, and in this time we can expect the EURUSD to climb towards its immediate swing high, which is there around 1.15. Last time around, we had seen EURUSD making a high just tad below 1.15 zone. So this time around, we are actually targeting 1.15, and I think If we consider this consolidation, this extended consolidation of almost 2 months, in which the Euro USD was able to hold above this immediate swing low, and then gradually the momentum picked up and we saw the Euro USD rallying back. So from there onward, we have seen this bullish momentum, and as I said, we are targeting on the higher side 1.15 in coming days. If you consider the 4 hourly chart, both the regression curve as well as the pivot point series, both of these are pointing to the higher side, and as you can see, we have seen Euro USD struggle close to these first resistance of this month's pivot point series, but as it is being able to hold, and even in today's session we saw this reversal after making low close to 1.138. So I am kind of optimistic in the ability of Euro USD to hold above this resistance zone, and if it is able to hold above this resistance zone, then I think the next target will of course work out towards the second resistance of this month's pivot point series, which is kind of far away, and we don't really need the Euro USD to go that far for us to make profit. Even if it is going to rise only to 1.14, we can indeed be in a position to make good amount of money. So here in the regression curve, the price action has been on the higher side, and the curve has sharply bent on the upside after this consolidation phase, and as long as the price action is strong and the momentum is strong, we don't really have to worry, and I think we have to watch out for this first resistance zone, the price area around 1.14, and this can be considered as a important marker for us while determining whether to go long or whether to sit on the sidelines. So here on the hourly time frame, we have these prior swing highs around 1.137, and even in today's session, we saw Euro USD making low just little above that. So here from the short time frame perspective as well, we have support zone. We also have the 100 SMA coming into play around 1.137. So a couple of factors are there, and because of that we saw these support the buying momentum pushing the Euro USD higher. So here if we get any opportunity in the today's session to go long anywhere around the price band of 1.14 with stop loss coming in around 1.136 to 1.137, that should be good enough, and a bet can be taken with possible move towards 1.147 to 1.148 on the higher side, and that will give us a risk reward ratio of 1:2. And given the fact that there is a high volatility after the ECB's monetary policy announcement, maybe we might see the Euro USD hitting either the target or the stop loss in a day or two, as the price action is likely to remain volatile. So either way, the Euro USD is will be giving up quick results, and of course we can be wrong also, we can be right, and in case we happen to be wrong, we won't really be losing too much money, and in case we are right, we will be making twice the amount of risk we are taking. Now moving on to the NASDAQ. NASDAQ has been consolidating closer to this 10,500 zone, and just a couple of sessions back we had considered the sharp downturn in the NASDAQ, and even in that session I had said that now is the time to look for short selling opportunity in the NASDAQ, and as I have checked the levels, if any of you had gone for that trade, I think you might be sitting on good amount of profit in today's session. So here there is a case for the Nasdaq to get on the lower side toward this 10,000 zone, which can be considered as its immediate support area. We have seen Nasdaq rally almost non-stop from these sub 7,000 levels to almost 11,000, and from there onward there has been this bearish momentum on the short to medium term perspective, and of course from the longer term perspective, things are still bullish, but we are more concerned with the scalping kind of opportunities in the NASDAQ, and from that perspective, indeed, things are looking promising for us to go short. Now here, if we consider the central pivot point, which is around 10,000, so we don't really have any major support zone in this NASDAQ's formation, and if you consider the regression curve, it has been on the bullish trajectory for at least quite a while now. And this time around, we have this price action concentrating on the lower side, and because of that, we can expect this regression curve to flatten to some extent in coming session, as the price action has moved to the lower band of this regression curve, and then if things don't really recover fast enough, then we will see even this regression curve bending on the downside. But as the things stand, I would say that this price zone of around 10,700 to 10,800 is an excellent area to target for short selling opportunities, while keeping stop loss just little above this second resistance of this month's pivot point series. So for a stop loss of anywhere around 10,900, you can indeed opt for the short selling trade, and as I said, on the lower side we can even keep thinking about extending our target to even 10,000 zone, or at the bare minimum, we can indeed target this immediate swing low, which is there around 10,400. So here on the hourly time frame chart, we have this resistance zone around this prior swing high, and the 100 SMA is also there. That's why I'm saying that 10,700 to 10,800 zone is of crucial importance for us, while keeping the stop loss just little about 10,900, or maybe at the max around 11,000, and that should do well. And as we have seen, the NASDAQ has entered into a short-term bearish trajectory, and even here there is a crossover of 50 SMA below 200 SMA is pointing to the hold of bearish momentum being on the Nasdaq's price action, and as we have this confluence zone of 50, 100 and 200 SMAs on the higher side, I am expecting the Nasdaq's price action to remain under pressure, and as we have already seen, there is a resistance zone acting as a strong selling area, and pushing the Nasdaq's price lower. So this time around also, if we get any fresh opportunity, I would recommend the same like the last time when I said that this is the time to go for short selling the Nasdaq. So that things even today hold well, and on the lower side, the bare minimum target can be around this immediate swing low, which is there around 10,400, or even you can even think about extending it to the 10,000, while keeping the partial positions open via and booking the profit on partial positions. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.